In this video, we're gonna talk about stock market predictions and forecasts. Where will the PSEI be at the end of 2020? If you want to know more where the market will be, check this video out. Hi everyone, this is Marvin Germo. If you're new to this channel, please subscribe and smash that bell so you get updated every time I come up with new content about investing, about the stock market, all with one goal: to help you reach your goals of financial freedom. By the way, we just hit 75,000 subscribers. Thank you so much to those who are part of this channel, and enjoy the rest of the video to learn more about where the market will be. Hi everyone, I'm doing something for the very first time. In this video, we have 6 different brokerage houses talking about their own analysis on where the PSEI will be at the end of the year. Let me know if this is something that's helping you, because if this is something that you like, we're gonna do more of this as well. The whole goal and the whole context of this is for you to get a snapshot about what the rationale is on why they're actually thinking that the PSEI will end this way. By no means this is something that you just get by its face value. My suggestion, whatever you get from this, research, learn, understand, get the rationale on why they are doing this and why this is the projection. Will things be better at the end of the year, or will things digress? Will the trade war have a larger effect? What's happening to Iran? That and more in the rest of the video. So I hope you enjoy our broker edition and their analysis as well.
Okay, so hi, good day to everyone. I'm Royce Aguilar. I'm part of the research department in First Metro Securities Brokerage Corporation.
And I'm Aaron Sai. I'm a consultant for First Metro Securities.
So we would like to share to all the viewers First Metro Securities outlook for 2020. And we're looking at year-end at around 8,950 to 9,150. So that's around 40 to 70% upside from last Friday's close. So our positive forecast for the year is hinged on several assumptions. So first, we do expect the economy to recover this year, specifically at around 6 to 6.5%. So we expect stable inflation to spur household spending. The central bank here in the Philippines, we do expect them to continue to be accommodative based on their plan to further cut the reserve requirement ratio. Also, the approval of the budget, the 4.1 trillion budget, I believe is going to be on Monday. So that could spur government spending right off the bat.
Yes, and we also think that PSEI is cheap, no? So with the PSEI earnings expected to be higher in 2020, then that would make historically or compared with other markets, no, the PSEI valuation cheap, no. So, and again, as we know, in 2019 there were a lot of concerns that led the investors, foreign investors, to sort of flee from the market. No, if when the dust settles, we expect them to go back again to the risk asset, and especially with the Philippine market. No, so those are the things that we think that can shore up, no, or push up the PSEI next year. No, so good economic growth, higher improved budget, higher earnings, cheap valuation, and of course the coming back of foreign investors. No? But of course there are some risks, no, and one of which is of course those factors that can derail economic growth. So anything that can derail economic growth is bad for the stock market, as well as if the economy experiences higher inflation more than the desired by the BSP, then maybe that accommodative stance, no, of the BSP might change.
So in addition to that, we are seeing trade conflict and Brexit may be out of the picture for now, but de-escalation of tensions between US and China. We saw US and Iran recently having tensions, so we should watch out for that. So any geopolitical instabilities in US, China, Europe, and even in emerging markets, that could affect global economic outlook and sentiment. So those are the key catalysts and risks we are seeing in the PSI this 2020. So thank you and happy 2020.
Happy trading. Bye.
Hi Marvin. Hi to the StockSmarts family. It's the time of the year again when we try to forecast where the stock market is going for 2020. So we have a lot of good things going for the economy as well as for the stock market. Number one, we have very good GDP figures. We are looking at the forecast for 2019 of 6 to 6.5% growth for the economy. And then for 2020, going 6.5 to 7.5%. Now, that's very good figures for the Philippines. Okay, secondly, we have the continuous slowdown of inflation rate. In 2018, we registered a 5.2% inflation rate. It went down drastically in 2019. We are looking at around the 2.7 to 3.5% range. And for 2020, we are looking at the 2 to 4% range. Also, we have very loose fiscal and monetary policies that hopefully will encourage the aggregate spending, which is good for the economy, and by extension for the stock market. Lastly, we're looking at the strengthening of the peso against the dollar. Now, before we become too enthusiastic about the growth prospects of the economy and by extension the stock market, we should also consider the challenges that we are facing for this year, both internally and externally. First is there's still the ongoing trade war between the two biggest economies in the world, US and China. This will continue to put a strain on our already weak exports. Secondly, for the summer of 2020, we are looking at the water shortage brought about by the developments in the El Nino. Now, we have seen a problem already with the water concessionaire stock prices like Maynilad and Manila Water, MPI, DMC, and MWC have gone down in the past 2 weeks because of the water concessionaire's problem with the renegotiation of their contracts with the government. Now, if this problem isn't resolved soon, we might see a very big strain, a very big problem on our water security in 2020. Thirdly, we should always be on the guard that infrastructure projects or the build projects of the government would not have a slowdown. Now, hopefully, the tailwinds will outweigh the headwinds that I have mentioned earlier for 2020, and hopefully, the stock market will continue to grow and will continue to go up faster in 2020. So good luck to all of us when we trade this year.
Hey, good morning, everyone. I'm TRISTAN Valerio of PPI Securities. I'm here to give my outlook on the 2020 market. But before I actually give my outlook, I think it's best if we do some context first, because targets without context is very dangerous, I think. So what am I talking about? First is, of course, assuming that fundamentals remain good, which is basically GDP remains at 6% up, and inflation is benign, and interest rates remain low, and of course, EPS, earnings per share of the companies, continue to grow at around 10 to 11%. That's assuming we still have that, then we have a chance of actually going up this market. But what are we actually waiting for in this market for us to have a high probability of it actually hitting our targets? What we actually need to see first is, of course, number one, volume. This volume is, right now the volume of the market is very low, 4 billion a day, 4 to 5 billion a day. We should see it pick up to around 7, 8, maybe 9 billion pesos a day first. If this market is to actually go up. Okay. Next is, of course, right now the market does not have a trend, so we need an uptrend. Okay, an uptrend. So this market is not tradable without a trend, so we need an uptrend right now. And then number three is a substantial break, a significant break of the 8,000 level, convincing break of the 8,000 level. That's another thing that we should be looking for. And number four, the most important is, I think, it's a given that this market is highly dependent on foreign fund inflows. I think it's around 50% of the market is foreign fund inflows. We need that as well. Right now, we don't have that. And if we don't have that, I just don't see this market actually going up above 8,000 or having a trend or having any volume. So I think that's really the most important part. For foreign fund managers have to start coming in a big way in the market again. So let's recap that. The fundamentals remain good. Okay, GDP at 6%, inflation is benign, interest rates are low, and EPS keep growing at 10 to 11%. what we need to see as well is volume goes up from 4 billion right now to around 8-9 billion a day. We need an uptrend. We need to break the 8,000 mark. And then of course foreign money. All of those things give you, if you have all of those things, okay, it gives you a high probability of this market actually going up. And if those things are actually in the cards right now, what we can actually target now is the BPI Securities house target is actually 9,000. So there. I'm not saying that you should buy right now and target 9,000. I am saying that you should wait for these things to happen first, so that you have a high probability of the market actually going up to 9,000. So what do you do until then? You just wait, in my opinion. Just wait and pick your spots. Maybe if you want to buy to the market, maybe buy the blue chips, the pattern blue chips, and maybe some of the outperformers, the blue chip space. I think you should just stick with the big companies right now, as the market is still very weak. So until then, I think we should just wait. So there.
Hey guys, I hope you guys are enjoying so far. Comment I'm enjoying if you are enjoying. Comment I'm learning if you are learning. Comment bullish if you think you have a more bullish and optimistic view on the markets based on the first 3 videos. If you guys are learning, here's the next half. The remaining 3 analysts we're going to talk about where the market is headed for the year.
2020s guys, this is Nisha Alistair from DA Market Securities, and you can follow us on Twitter at iTradePH. I want to talk to you about 3 things that are important to me today: the PSEI market outlook, the 2 products the PSE is rolling out, and what it's all for. So in terms of outlook, we think that there's still opportunities in the market at around the 7,400, 7,600 level. That's around 14 times PE, below the 5-year average mean. Now, if you go to the upside, we think that 16 times presents good profit-taking opportunities at around the 8,200 to 8,400 level. Now, of course, this is still just a range that we're starting out with, but it would still largely depend on the catalysts for the index, and those are inflation that we think is still going to be low, rates that are going to be managed by the BSP to encourage growth, the USD PHP exchange, which will probably be capped to a weakness of around 51.50, and the GDP to fall within the range of expectation, which is between 6 to 6.5. Our estimate is around 6.1%. Now, we think that the trade war issues are starting to ebb, and that would provide further positive catalysts. But of course, these are the same factors that you should be looking into throughout the year. Now, in terms of industries that you're looking at, we'd like to fuse together 2 concepts, which is number 1, earnings acceleration, or EPS, but also that we want to include responsible investing, which is relating to businesses that have inclusive growth for more. So we look at renewable energy. We like property developments that actually consider building around the environment, and so our picks include a lot of the Ayala companies that include Ayala Land or Ayala Energy, which is not just going to be expanding in the Philippines but also outside. They've also got a complementary business in warehousing and logistics, which is All HC. Now that's just some of our picks, and we go into detail with Marvin and also with our firm. Now, when it comes to the PSE products, we really love that there's more development now in the real estate investment trust and the short selling. This will deepen market liquidity, attract more investors, and provide you more options. Real estate investment trusts allow companies to recycle capital and therefore reinvest and leverage on growth. Whereas short selling, actually, it might be contrary to counterintuitive, but it actually provides more market equilibrium because, as you'll know, markets really collapse on gravity of selling shares, but on a buyback mechanism that the short selling provides, then the equilibrium in the markets is actually more easily restored. And so we're looking forward to more developments on that. And finally, I'd like to espouse and emphasize on responsible investing, which is investing in companies and supporting local companies that actually really think about sustainable growth. So you're looking at companies that invest in industries that actually provide more benefits to the community. Yeah, that's it. And hope to get to talk to you again more. And have a great year. Happy investing.
Hi everyone, it's CALOY CAPACILLO and my son is here. Our forecast for the market is 8,600 for 2020. That's up 10% from where we are. Globally, outlook is improving. Phase 1 deal between the US-China trade deals is there. That would support the global trade. Locally, we're seeing the stronger GDP growth on the back of low base on first half of 2019 where we had election spending ban and we had delay on the budget. Going forward, so we're very positive this year. We see also that this being the last 2 terms or last 2 year of the president's term, we will see ramped up infrastructure projects that would really help boost the economy. On the downside, of course, we're seeing some regulatory risks on certain industries and on certain companies. So maybe best to stay away from them right now. Other downside forces would be external, like oil prices and the foreign exchange. So as we always say, when you want to make money in the markets, it's when luck meets. Luck is when opportunity meets preparation. So just make sure you study your fundamentals, you observe market technicals and psychology, and best of all, make sure you have your own and you follow your own trading plan. It's only you who would know if you invested well for 1 year, 5 years, up going to 10 years. Again, this is CALOY of AP Securities. Thank you, Marvin, for inviting us, and hope everyone learns from Stock Smarts as much as we do. Happy New Year, happy 2020, happy trading for everyone. Thanks.
Hi, this is Sheena of MyTrade PH, the online division of Securities. So 2020, the year of perfect vision and clear clarity in terms of eyesight, but we are having a little bit of poor visibility. A few days ago, before the 2019 ended, we have released a report regarding the projections of the year 2020. And according to the head of our research, Nikki Franco, that if you want to follow him, by the way, you can follow him HOR102 or follow us on Twitter as well. Biggest reason is, in our view, is the heightened regulatory risk. Okay, the one single issue that that what was told in the report is the validity of water concessionaires contracts. Okay, caused the share prices of several firms to collapse and drag down several others to a lesser extent. In the past few weeks, he mentioned that we flagged at least 2 reasons why the local market is susceptible to regular risk. First is we noted that up to 20% of the reported profits for companies in the PSEI are double counted. First is at the subsidiary level, which is like, for example, MWC, and then the parent, which is, for example, in this case is Ayala Corporation, reports its share price of its water's units profits. So when the former, which is MWC, the subsidiary level, catches a cold, a regulatory issue, there will be a domino effect. That's what he said, and that's what we, in terms of our view, is. Second is we pointed out that at least half of the members of the index are exposed to moderate or high regulatory risk. This encompasses risks such as franchise risk, rate setting or tariff risk, taxation, contract reviews, labor and environmental, and much more. But despite of all of this, we still believe that equities will do better and may even challenge the all-time high, which is 9,137 for the next 12 months. If you want to know about this in a more detailed manner, we have already released 3 parts. So this is just the tip of the iceberg. If you want to know more about it, come visit our page, MyTradePH. That's it, and happy 2020.
So that's it for now. I hope you guys got a lot of insights from this video. I hope this added so much value to you, because that's all I want. I want you guys to win. I want you guys to be able to use whatever data that's in this channel so that you get to be part of people who know what they're getting into when it comes to the stock market. Please remember this: when it comes to investing, the best thing that you can do is make decisions based on something that you have been informed with. So I hope that you got so much from this. Thank you also so much to all of the brokerage houses who took part in this, who gave their opinion, who gave their insights. Thank you to all of you guys, because you guys have added content to a lot of people, and I hope this reaches as much Filipinos as possible, because again, that's all I want. I want to see more and more and more and more Filipinos reach their dreams of financial freedom, that they're coming in not because they got hyped, not because they're speculating on it, but because they have the right data and the right information to be able to trade the markets with confidence. So that's it for now. Marvin Germo, I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.